Today on the CEO Barbecue, we are looking at one of the world's largest undeveloped copper deposits, which is in Argentina, and it's being operated by Aldebaran Resources. If you want a bullet point summary of this conversation and all the other CEO barbecues in your inbox once a week, go to resourcetalks.com and subscribe to our free newsletter. Now, the company you're about to hear from has paid us for the production of this video, which means that this is not research, it's an advertisement, and you should treat it as such. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. And please only watch this if you absolutely know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased in multiple ways. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital might be at risk. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Aldebaran is listed as ALDE, so ALDE on the TSX Ventures Exchange, where over the last 3 months, the average volume has been about 52,000 shares. The stock's 52-week high is $2.35, and its 52-week low is 87 cents. With a market cap of almost 320 million Canadian dollars and 170 million shares outstanding today, this is a $1.87 stock with a 50 and a 200-day moving average at respectively 175 and 166. So it's currently trading above both of those. There are just under 14 million options outstanding with a weighted average exercise price of $1.22, of which about 6.7 million is already exercisable at 68 cents. But as far as I understand it, they are all held by employees of the company and were granted under the stock option plan. And very much to my liking, though, no warrants at all. All in all, the number of fully diluted shares here then is just under 184 million, meaning an increase of about 8% can be expected if those options get exercised, which would then result in just under 8% shareholder dilution if, and again, that's always a big if, but if all options actually get exercised. A couple of big names are here on the registry at decent amounts too. So we've got South 32 owning almost 15% of the company, Sibanye Stillwater at over 14%, and Route 1 Investment at over 44%, as well as insiders owning just over 5% of the company, leaving about 21.5% in the hands of the public. Now, I'm not doing a full company overview here because John and I spoke a few times just a few months ago as well. So I'll link to that video for people who are new to the story. But there is a new financial statement that's being published, so I will go over that here. And this one shows us the numbers as of March 31st, 2025, which is when the asset side of the balance sheet held about $29.7 million in current assets, most of which recorded as cash and cash equivalents to the tune of $25.2 million, and as well as some marketable securities were on top of that for just over $3 million. On the liability side of the balance sheet, I can see a $9.8 million current liability. It's mostly in the form of account payables and accrued liabilities, as well as a small amount that's due to related parties. I don't see any long-term debts, and there are no non-current liabilities, but it's not long-term debt. They were made up by a $1.5 million decommissioning liability and about $700,000 in deferred tax liability. Moving on to the P&L, this shows us the spending profile for the 9 months that ended on March 31st. And Aldebaran recorded $3.3 million for that period, although none of it is a cash cost because this includes share-based compensation, and that was $1.6 million, meaning about $1.7 million was spent on running the company, which is an average of about $180,000 a month, $183 to be specific. 24% of that money went toward consulting, management fees, and wages and benefits, while office and admin was 27% of the spend. Investor relations was 20% of the spend. Accounting accounted for about 12%, and various smaller expenses making up the rest. As to the exploration and evaluation expenses, those get capitalized here. So it is note 4 that provides the breakdown. And if I'm reading it correctly, for the 9 months between June of last year and March of this year, Aldi recorded just under 25 $24.5 million as exploration expenditures, where almost all of it, so $24.7 million, was recorded or accounted for by field operations. As always, I've got two ratios here, and it's the exploration to administration ratio, which sat at almost 15.5, meaning almost 15.5 times as much money went toward exploration as what went toward administration. And then the second one I've got is the field to marketing ratio, and that's almost 73 here. It means that almost 73 times as much money was spent on field expenses as what was spent on talking about them, essentially. As always, though, for viewers and listeners, you should stay on the safe side and go look at their financials yourself on setterplus.ca, understanding that the financial profile will vary from quarter to quarter. That all said, though, enough accounting, at least for the next couple of hours, and also no in-depth company overview needed here, as I mentioned earlier, because John and I had an in-depth CEO barbecue just a couple of months ago, so I'll link to that in the description of this video again. But just very briefly, though, for people who are new, Altar is the star of the show for Aldebaran. That's their flagship asset, and it's a very big copper-gold porphyry project located in the San Juan province of Argentina, and it's now a JV with Sibanye Stillwater, hosting over 30 billion pounds of copper equivalent, and not all of it has been drilled out. There's even targets that have not been properly tested to begin with, which is also hopefully something John and I can touch upon later in the conversation. But first of all, John, thank you for sitting down with me today.
Yeah, great. It's a great time to catch up, Antonio. Things are pretty exciting at the Altar project, and Argentina is a wonderful place to be exploring right now.
I'm looking forward to talking about all these things, as well as the Altar project, maybe toward the latter part, talking about the jurisdiction itself. But I want to talk about maybe less pleasant stuff here off the get-go, which is your stock price, which, although again up significantly over the last 52 weeks, it's barely gone anywhere since the last time you and I spoke, even though there have been those developments that you told me about in the Aldebaran story. So how come, and why do you think, what do you think the market wants to see from you to get back on the bid, essentially?
Well, we're relatively pleased with our share price in a more backing up and looking over the last year. We've got that nice bump with the resource that came out, which we anticipated and was well deserved on the project. But as you note, since that came out, we've been pretty flat on this. And that's often a challenge we see in projects like this, that when we come out with a new resource update, we achieve a nice re-rating, a nice change in our market cap overall on the project. But then we're moving into a style of drilling this year that's really getting information for the PEA that's coming up. And that means we're no longer drilling new drill intercepts and extending resource and announcing new areas. And so sometimes that falls in the category of just more information, and people are really waiting to see that next real step. So I think that the next opportunity for significant re-rating the company is when we come out with a critical PEA, which is set for Q3 of this year, so approximately September of this year. That's an opportunity for us to see the project in a new light, really, with economic parameters wrapped around it. What does a mine really look like? And that's typically a point where you see a significant jump. So major studies like a mineral resource estimate, a PEA, a pre-feasibility eventually in the project, those are where we expect a pretty significant jump in the market cap of the company as we move forward. And sometimes you get in these areas in between where it's a little bit flat, where people have done very well. People that invested in the company a year ago are up very nicely. And so in many cases, I imagine they're perhaps taking some of the profit off the table, investing that in other opportunities, thinking they have time until the PEA. But I think that PEA is going to be on us faster than we think. So it's a good time for people to reposition and think. But a lot of times you want to be in a position to take advantage of a re-rating coming up by obtaining those shares. And I think we'll probably see that happen over the course of the next few months as we get closer to delivering the PEA.
This is more talking about the bid, as I mentioned before, but what about the ask? I mean, is there like a big name or a big holder maybe that you think is currently hitting the ask, taking those profits that you said are trying to get out? Or, I mean, have you been able to track something in that regard?
With Aldebaran, we don't see it particularly from one source, or we're not aware of a large iceberg or something like that. It's coming out. It's coming from a number of different sources. We are well aware of people that are new to the story that are taking advantage of having some availability. We're trading a bit more than we typically do. Most of our companies our shareholders are long-term shareholders, so we don't typically have a lot of turnover. And this is an opportunity if people are looking to take some profit off the table right now. It opens the door for people that want a position. So we're well aware of a number of new buyers that are coming in on this. As you'll recall, we don't have a lot of true float on this company. Many of the shares are really held in some of our more significant shareholders. So with the amount of turnover that we've seen over the past year or so on this, I would anticipate it would tighten up as we get closer to more significant news.
There's so much so, actually, that there's even a movement online. It's called the In John We Trust movement. And so those people apparently tend to hold their shares for longer. John, do you think that you might have to, in order to maybe up the liquidity here in the stock, do you think you might have to change exchanges and try and list in the US or elsewhere? I mean, I've seen a lot of talk about that in recent times in on the Canadian market. So are you happy in the TSX?
We're happy on the TSX in that sense. We're not a company that's looking for a lot of turnover, a lot of liquidity, and a lot of sort of day trading on it. That's our objective is really to find a deposit that has true merits and true possibility to be a mine, and to advance that to the point where we produce a product that's attractive for a major company to acquire from us. So we really our strategy is entirely looking towards an end game with a serious monetization event at that end game on it. So what we like to attract are shareholders that share that philosophy and see the value in what we have, and see the potential for significant addition of value as we get closer to that stage. And so we're not trying to get a lot of encouraging people to sell on a regular basis or do that. What we're really looking for is like-minded investors. We're investors ourselves in our own companies, and we're looking for that. So liquidity is important. It's people do have a necessity to sell shares at times and get in and out. So we're conscious of that, but that's not a driver for us. We're not working day to day or month to month. We're really working towards our end objective on the company. So we haven't particularly considered a different exchange for that. We're well aware that there are some other exchanges in areas that perhaps have more interest in mineral resources. We're finding Europe to be a pretty interesting area right now for a lot of interest in investing in mineral resources. But most investors have access to the TSX and are able to invest that way. The only consideration that we've given a little bit of thought to on is that, as I mentioned, our strategy is to produce a project that would be of interest for a major company to acquire from us. And there have been some situations where Chinese buyers, for example, would be concerned about being able to buy a Canadian listed company. The Canadian government at times has blocked the sale of some assets like that. And so we're not alone in this. We've seen some of our peers either seek alternative listings or delist even, perhaps to be able to be in a better position to allow that type of a transaction to happen. We've given that some thought on it. It's not a simple thing. You really are re-domiciling when you do that. It's not just changing your address of where you're working. So at this time, we don't think that that's critical for us to be doing, but that's the closest we've given to thoughts of going to a different exchange.
That would have actually been my next follow-up question, because I am seeing that, especially when it's about large critical metals projects, which in your case with copper is the case. And there's lots of other things there to get into. Let's maybe start off a high level here, though, John, because you're touching up on multiple things, multiple moving parts with the Aldebaran story as well. And it might be better to maybe give me a summary, kind of a bullet point summary on how much money you've spent here since the beginning of the year, since when we last spoke, and what work exactly have you completed with that money?
Okay. Rather than the beginning of the year, what I'll do is I'll treat our whole field season. And our field season is sort of September to June. And then we have June, July, August off for winter in South America. And so for the full field program this year, our budget was approximately 25 million US. and we came in pretty close to on that. So it's worked out rather well for us. That program consisted of a shift. Up until this year, we've been spending in the order of $15 to $20 million per year and drilling 15 to 20,000 meters as resource definition, really just trying to find the edges of the deposit, define what we have. With the resource estimate that came out in November of last year, we've demonstrated it's an extremely large resource. In many ways, we don't need to find more mineralization right now. It's still open. There's a lot more there than what we show, but we have more than enough to work with. So this year, what we're shifting to is really gathering the information we need to be able to put out a PEA and, more importantly, a pre-feas. With that PEA targeted for Q3 of this year, approximately September of this year, and the pre-feas for the end of 2026. So that means we shift from resource definition drilling to drilling for metallurgy, drilling for pit slope type parameters, drilling for water, infill drilling as well to improve the confidence category of the drilling, although we're fortunate we don't have to do a lot of that. And so it's less reporting new exciting intercepts of brand new zones of mineralization and new discoveries, and it's more mundane routine stuff, but highly critical information for the next steps that we're going to on this. We completed a little over 25,000 meters of drilling this year, which was our objective. Had up to 6 rigs drilling at one time. The rigs just came off the project. We shut everything down on the 23rd of May. Fortunately, just in front of a pretty major snowstorm. So we got everybody out safe and sound and accomplished all the objectives we had for the year. So we've spoken a little bit about recently we've spoken a little bit about some of the Nuton results or metallurgical results that have come out. And you'll see the results from the drilling, mostly the infill drilling, come out in probably 2 releases over the course of the next few weeks and months. So during the winter time, we'll get 2 batches out with all of that information out so people can see it. But as I said, a lot of it's really gathering information that's helping us determine pit design and where we put tailings and where we get water from and things like this, which are highly critical questions to answer in the project, but not necessarily the kind of the eye-catching headlines for details coming out or for news releases coming out. So quite pleased. It was our largest campaign ever. Very interesting to be moving into different disciplines and more engineering type work as we move forward on the project. We've also this year emphasized increased community outreach. So we've established an information office in the local town of Barreal, which facilitates our conversations with local community members. Many of our workers come from the local communities. And it's nice to have that point so that we can not just interact with people that are working for us or providing service contracts for us, but interact with the rest of the communities. We've done that over the course of the last few years, but that's really been ramped up this year with more direct communication. A good example of that would be in the off season. We typically have had to lay off all of our temporary employees. This year, we've kept some of those temporary employees for the full season. And during the 3 months when we're not on the project, they'll be doing community improvement projects, painting schools, helping improve some retirement centers in the area, roadworks, just things that can improve the community. And it's nice because it's people that live in the community working for us that are improving their own community. And that's developed in some really good conversations with the communities in terms of what do they really expect, what would they like to see from us, just being good neighbors going forward. So I'm really just as pleased with that as I am with the whole technical aspects of the project moving forward.
I appreciate this overview because you're essentially doing my job for me, and you've covered 3 or 4 questions that I was going to ask, so I no longer have to do that. But talk to me more about this. The delay in the PEA. I mean, you're mentioning Q3.
Yep.
I thought it was going to be June. What happened? Why are you delaying it?
Well, historically, what we've done is we've worked on a season to season basis, and in many of our agreements, our budgeting, everything kind of moves on that. We start in September. If we're fortunate with the weather, we can go to May, and then we have some off months. And so when we originally laid out our program, we projected that we'd finish the PEA about mid-year, the end of Q2. And that made some sense. We thought we'd be done. Much of the drilling that we're doing this year is data that we're collecting for the pre-fees. We have all the data that we need, with the exception of some information that's coming in from the metallurgical testing with Rio Tinto for the Nuton work. And as we started getting into the heart of doing the PEA work, we realized that it's a bit more involved than we thought. And we wanted to make sure we had the most accurate Nuton information that we could use going forward on that. So we realized we were rushing things to be able to put the PEA out. And part of it is this is not a simple PEA by any means at all. This is a PEA that will have two aspects to it. We'll be evaluating the project through conventional processing methods. So milling, concentration, producing a concentrate, selling that concentrate to the open market, the way most potential operators would go forward with the project. But in parallel to that, we're also evaluating what a Nuton heap leach case would look like. So in some sense, we're almost doing two PEAs in the same PEA. And then we're also getting a lot of feedback from our current partners. Keep in mind, we're very fortunate that we have Rio Tinto as a partner. We have Sibanye, who we're earning in from on the project. And South 32 is a critical equity partner for us moving forward. So we hear good advice and good thoughts from them on everything, as well as other groups that are under confidentiality agreement monitoring us and looking at us. And we became aware that this is an extremely large project, and the temptation is to try and make it as big as possible. But many groups have a lot of sensitivity to initial capital outlays on projects and profitability of projects going forward. And so we realize that there's an opportunity here to evaluate how we scale this project. Perhaps it's best to start at one scale and then have optionality to increase the scale over time, and that might make an economically more attractive project rather than just reach in and the temptation is, hey, let's do this at 200,000 tons per day and go great guns, but that capital cost starts to get pretty intimidating on things. And so we just thought let's work through different scenarios, optimize the project, and present the best PEA we can going forward. And best means a lot of things. Obviously people will focus on production size and profitability on that, but it also is executability of the project. Is it a project that makes sense to be able to go forward, and how quickly can you get it into production? And so there were a lot of factors in there, and we just felt most comfortable giving ourselves enough time to make sure we did that well. And so we chose to, rather than wait until this time and say, oh, by the way, we're not done, it's going to take us longer, we felt it was best to advise the market that we need a little bit more time to do it well.
Well, 200K TPD does sound good to me now that you're saying it out loud. But it's also almost shocking to me to hear that there's people in mining who actually want to make money and care about profitability. I thought it's always just about size and nothing else.
No, it's best to think how you get these projects in, and we're not the only one working with this. Up the road with the guys with Vicuña now, with the Philo and Jose Maria. Sometimes it's important for us to be able to begin projects at a manageable scale and get benefits to communities more quickly, and employment more quickly, and copper to market more quickly. And that doesn't necessarily mean going big really fast on things. The project's there, that opportunity is there down the road. So we'll see. We don't know what the answers will be on how we do this just yet. There are a lot of stuff that we're evaluating at one time on this. And then on top of it, we have does this work best as a heap leach, or does it work best as a conventional project? So this will be a pretty exciting study to take a look at when we come out with it. There'll be a lot of information that's not only germane to our project, but also just an approach overall on how do you take on these large projects and most beneficially develop the project in the terms of profit to the company, benefits to the communities, environmental sustainability. A lot of different factors go into it.
But Q3 is kind of set in stone, or how do you see? Like you're definitely
we feel pretty comfortable with that. Yeah.
Okay. Yeah. Understanding that this is forward looking, by the way, John, but what are your internal expectations for the conversion here? Like what percentage of the resource is going to get converted into the PEA?
I'm actually not allowed to answer that question directly ahead of time on this. So I honestly don't know the answer just yet. So I'll have to take a polite pass on that one.
Hmm. Well, that's fair. But we'll also talk about the Nuton stuff here in a second. You do talk about faster permitting scenarios here, though, as a reason for the delay, or partly as a reason for the delay. What is it exactly that you're trying to I don't know, avoid or work around? Like, what does that mean when it comes down to permitting?
Well, the permitting just sometimes it's a scalability thing because if you go too big, your footprint gets bigger and it just gets more involved.
Okay.
And so sometimes it's easiest to ease into that. It's also just capital allocation for companies. A lot of times they want to get started and then get cash flow going to finance subsequent expansions. We see most major mines or mining districts around the world do that, where you start at one scale and then as you get that phase done, then you make an expansion into a larger scale. Sometimes even changing processing technology and some of the projects in Peru and Chile where you've seen that, where you start with a heap leach and you move into a milling operation over time. There are a lot of different scenarios you can go forward on it. And but it, yeah, and it's just evaluating the best way to sequence a project coming in.
But it's not because I kind of assumed that it would be a different permitting process if you go with the Nuton technology versus a traditional heap leach.
Somewhat different. It could be different. So determining which pathway forward on that is pretty critical. And this study will provide us a lot of the information we need to know the answer to that going forward. So, for example, applying for an environmental permit right now would be very premature when we don't know the principal processing technology. And there that kind of gets into the whole RIGI things and stuff. There's a lot of reason to go fast on a project now in Argentina to get under the very attractive investment incentives that are being offered to us. But that does mean to do that correctly, you need to have your environmental permits in process or largely approved as well. And in rushing an environmental permit to be eligible under RIGI right now, makes some sense, but not if there's a chance we would change our processing technology. Then we'd have to almost start it all over again. And so we're just trying to get that best blend of how do we go forward.
Given that Argentina has been, you're reminding me, I'm writing it down as you speak here that I should ask you something about RIGI. But given how Argentina has been developing over the recent years, how much or how transparent is the permitting process? Like, how much time do you think it could take for a project the size of Aldebaran to get fully permitted, like from PFS to actually shipping concentrate?
It's fairly transparent, fairly straightforward on the permitting process. It's one of the better jurisdictions worldwide that I've certainly worked in terms of being able to move a project quick to production. Keep in mind, quickly is a relative world when you're dealing with big copper projects. It always takes longer than I think many people imagine, for a lot of reasons. But Argentina certainly is the government and the public are highly motivated to get these projects in and attract the jobs that would be provided with this and the economic stimulus that would provide the country. And so everyone's aligned on moving these forward, but it's needs to be done in a responsible way and follow certain steps. But we don't see anything unusual on that. There are attempts like with the RIGI that we'll talk about in a moment that to be able to get that in place to encourage these large investments and going forward. There are some timelines that are set on those that are slipping a little bit. But keep in mind, all of this is relatively new to the government and to the companies that are applying for it, and we're working with it. It's not because of resistance to developing projects by any means at all. It's just kind of working through what's the process that needs to be done on things. But we're quite pleased with how they're going forward. So a project like this, I mean, we'd be looking at PEA this year, pre-fees at the end of next year, realistically 1 to 2 years to get to a definitive feasibility study. So you're looking at early 2030s to have a project like this into production, which is quite quick in our space, actually. So
Yeah, it is. Well, you're lucky you're not in Alaska, but that might be a conversation for a whole nother time. And it's actually you and I spoke about glaciers and communities and
Mhm.
whatnot last time. So if people want a more of a deep dive on the permitting and all these things, that's in there as well. Again, it's linked in the description, so they can go watch that. Let's do talk about RIGI, or am I saying that right? RIGI? How
Yep,
are you supposed to say
RIGI.
RIGI?
Yep.
I don't know. Um,
Uh, we say RIGI. It's kind of probably the Spanish pronunciation of it. So yeah.
RIGI.
So
Yeah, it could be. I don't know. But we can do, yeah, let's talk about that. Would the tax incentives apply to both the Nuton and non-Nuton cases here, or how would that work?
as far as we know, yes. What the tax incentives are really designed for is to attract large foreign investments to develop resources and other things. It applies to mining, it applies to oil and gas, it applies to renewable energy, to agriculture. There are at least six big buckets that have been categorized as eligible for RIGI investments. And so it doesn't specify what type of processing by any means at all. The parameters are it needs to be a million of a $200 million investment. And once you apply for it, there's a pathway and a timeline that you have to move forward. So it's if you apply for it and it's accepted, it provides very attractive investment conditions to move forward. Moving Argentina to on par or slightly better than other neighboring countries in South America, which it's not something that's totally different. They're not cutting it so low to make it attractive that it's a different world. It's really just bringing Argentina into a competitive position to attract these investments for the first time in decades, really.
Hmm.
And that's very critical to us. What it involves is lowering your tax rate. It deals with how you amortize projects. It involves import and export of materials, a whole variety of things, but the net effect is it makes it competitive to make investments on the development of large mineral resources like we have in the country. And that's really opened up the door. It's always been easy for us to explore in Argentina and oftentimes quite economically attractive too. It's been cheap to explore in Argentina for decades. But there were no conditions that were attractive for a large company to invest a large amount of money to develop a mine, mostly because you were taxed heavily and you couldn't get your profits out of the country. So those are the critical things that have been changed right now to make this a very attractive environment for major companies. And we've seen the result of that. There are quite a large number of companies that have applied for RIGI permission, and we see it in lithium, we see it in copper, we see it in oil and gas, renewable energy. It's there are quite a large number of these, and the first mining one was just approved a few weeks ago with Rio Tinto for a lithium project up north. And so that was very encouraging to see. Not only are people applying for these, but they're actually working through the process and being approved to go forward.
Well, so for a little bit of a background for people listening, RIGI, or RIGI, it stands for Régimen de Incentivo para Grandes Inversiones. That's my best Spanish accent. So don't laugh too much with me in the comments, maybe just a little bit. But it's essentially large investment incentive regime. That's what it says on here. Just looking at it right now. What else does that mean for you? I mean, I see a couple of points just looking at what people are writing: taxability, customs and import flexibility, dividend repatriation plus forex freedom, and accelerated depreciation of VAT refunds. Is that tangible for you at this stage now, or how do you look at it now?
It really isn't for us at this stage, but it's very important for the eventual developer of the project. And so we can have a great project, and if it's not attractive for someone to build it and operate it, they won't be interested in acquiring it from us.
Hmm.
And so it's really the end game. It's the developer that this is important for, and that's we're one of six or eight large copper deposits in Argentina that, quite frankly, if they'd been located in Chile or Peru, they would already be mines. But because the conditions in Argentina haven't been favorable for large foreign capital investment to develop these types of projects, they just haven't happened. And now that door is open, and that's why every major mining company virtually is looking hard at Argentina, and many have already established position. We've seen Rio Tinto with the lithium agreements with us, agreements with Los Azules just to the north of us, BHP purchasing Filo and Jose Maria, or a portion of Filo and Jose Maria. We're seeing big steps coming in. South 32, one of our partners, was probably ahead of the curve on this
Mm.
and got into Argentina early. So we're seeing a large number of companies very interested in taking serious steps moving forward. So I think in the next year or two, we'll see the announcement of a number of major mines going forward and being constructed.
Because what it means for you, essentially, just to kind of summarize what you've said here, it's lower tax burden long term, though. So that's important for people, wanting to build long life mining assets, I suppose. It'd be easier, I suppose, with the import stuff. It'd be easier to get machinery and whatnot, especially if it's in large pieces. It'd be easier to get it into the country. Um,
Easier and less costly,
yeah,
both. So
yeah.
for fewer tariffs, if you will, or charges on top of those to come in, and a much more rapid process to get things in.
Yeah. Forex stability might also help with the IRR here, make it more attractive to investors and majors, because that's what they're looking for. Just to what you told me before, is like they want that profitability. That's your IRR. So
Mhm.
yeah, that's kind of what I'm getting out of it. Lower tax burden, easier to import stuff, forex stability gets you higher IRR, potentially attracting more majors into the country. Is that a fair summary?
And very importantly, you can repatriate your profits.
Yep.
In the past, you could make a profit, but you had to keep it in country and invest it in something else, and that's not very attractive to an international mining company.
Mm.
And a minor but fairly important thing on this too is it's protected by international arbitration procedures. So Malay's government has tried to make this as bulletproof as possible, and the result's obvious is that major companies are rapidly applying for these conditions.
What's the catch, though? I mean, I kind of summarized it there to just see, like, does it look almost too good to be true? So, I mean, and I'm the kind of person who thinks, there's always a catch. So, what's the catch here?
Well, the catch is I mean it's not over the top, like I mentioned, is they're not making something that's just totally different than anybody else. They've really brought Argentina up to the standards of other major mining countries. Maybe surpass some of the neighbors just a little bit to be slightly more attractive, but
Mm.
it's not anything that's unfair to say they are, because it'd be great if companies didn't charge us any taxes and allowed us to do things, but that's not fair to the country either. So you need to strike that balance. So I think they've thought it through pretty carefully and are trying to strike that balance well. So then what it turns into is the catch is really the challenge that we face, or mining companies face on the development of large projects as overall. We're talking about a large amount of capital that needs to be invested to put a mine into production that will last for decades. And it's very difficult to predict what price conditions and what things are going forward. So you have to think that through pretty carefully and make sure you understand the project well. You've de-risked the project. You know the best way to go forward on the project. It's never an easy decision for a company to make a decision to build a major mine like this. And in our case, we're asking people to make a decision to pay us for our project and then build it. So it's a buy and build commitment to go forward. And we're talking about literally multi-billion dollar decisions going forward. So those have to be treated carefully, and people aren't going to just rush in and start announcing them immediately. They take time. And then with what's going on in Argentina right now is Malay has created these conditions, and it's not just the investment conditions we're talking about right now. It's also just stabilizing the economy, reducing the inflation in the country, putting things on a much more stable, more predictable footing to go forward, which is really critical. He's done that, but it's come at a pretty serious cost for all Argentine people and companies in terms of prices going up, fewer jobs available, tightening of the belt, no printing of money. Things aren't as free as they used to be and heavily subsidized by the government. And so all those steps were necessary to stabilize the economy and create this favorable investment environment. That's happened. It's viewed very favorably from outside, but it hasn't quite translated into a lot of new jobs on the ground yet in Argentina. So it's very critical as an industry now that we embrace this opportunity to develop these projects, but think about getting them moving pretty quickly and producing new jobs, producing an obvious benefit from this, not just big announcements and commitments that way, but let's translate it to actually new jobs on the ground so people can see the results of that. That's happening already to some degree in the north with the lithium projects. The lithium projects are much easier to develop and more quickly developed. And so you see new jobs and new tax revenue coming on. Keep in mind, once these projects are up and producing, that provides tax revenue for the government so they can begin to fill in the void and do things going forward. And so this is really nice to see on that. Copper projects take a little bit longer to develop. They're not as quick as the lithium projects, but we'd like to see those moving forward quickly as well within the next year or two.
RIGI is federal government, though, right? And as far as I understand it, the provinces in Argentina have a lot of decision power as well. Could that create anything that slows down the process or any kind of friction in between the two?
Not that we're particularly noticing. No, and there's an increasing. One interesting phenomenon we've seen in the mining space is that it used to be we had very pro-mining provinces and some very anti-mining provinces and a few in between on this. We're seeing provinces that have historically been almost a no-go zone for mining or mineral exploration embrace the opportunity to begin to develop their mineral resource. Mendoza is a classic. We're in San Juan, which has always been one of the more favorable provinces. There are large mines like Barrick's Veladero mine in production for some time now. And so people are accustomed to mining. They see the benefits of mining, and it's a relatively easy place for us to work. Mendoza has been a place where it's been very difficult to develop projects going forward. But they've realized the potential for this and the benefits for people and more carefully looked at it and realized that mining can be compatible with agricultural and touristic development as well. And so they're coming around to what I think is a more responsible, more mature approach to this. And they're out actively shopping projects in Mendoza as a provincial government right now, trying to attract money. I couldn't have even imagined that 5 years ago. And so that we're seeing that change. We've been participating in a number of mining investment forums or industry forums in the last year. And we often, as a major project in San Juan, get asked by the San Juan government to kind of work collectively to promote San Juan. And the San Juan government's being approached by the governments from many other provinces saying, "Hey, can we copy what you're doing? We'd like to have mining too." So it's a huge shift right now. So we're starting to see the provincial governments and the federal government be more closely aligned now.
We're also starting to see, I guess, the economy stabilize a little bit more, specifically from the pricing perspective and inflation and whatnot. So prices seem to be settling, although at a bit of a higher level than they might have been a year ago had we spoken then. How's that influencing you? What are you seeing on the ground?
What we're seeing on the ground is that, just kind of day-to-day type stuff on this. If a meal in a restaurant now is notably more expensive, which sounds like it's not very good, but it's really on par with neighboring countries now. Historically, it's been incredibly cheap to be a tourist or to work in Argentina in terms of lodging and housing and things like that. And those prices are going up and going up pretty notably. And part of it's because the exchange rates are coalescing now into we're getting close to having just one exchange rate moving forward. Argentina, to handle their economic challenges, historically, we've had a lot of official rates. And as an industry, in the exploration industry, we're bringing funds into the country, and bringing money in is well received, and we were provided with very attractive rates to do that, which meant that our costs were quite low, remarkably low, really, for a lot of things. It was a fantastic country to be a tourist in going forward. But that's changed now. And so now we're seeing really a movement towards fewer and potentially even just getting to one official exchange rate. And that's an important step to stabilize the company. I would trade off economic stability for paying slightly higher prices any day.
So what's a 10-ounce steak costing you now versus back, last year?
You can still get the best steak dinner you want with good quality wine and other things associated with it for it used to be $15 a person. Now it's maybe $30 a person. So it depends where you go. And Buenos Aires is a little more expensive than San Juan, but it's still very attractive and high quality food and a good experience that way. It's more on par with what you pay in most other places. So
hearing this, sitting in rainy Belgium, it makes me just want to close my laptop as we're speaking and get on a plane. Let's talk more specifically about how the thing with Nuton is going. How's the testing going? When are the phase 2 results coming out? Talk to me more about that.
Yeah, so the test is going very well. So our phase 1 on this project are the 1 meter columns. Mm-hmm. And so we've collected a large amount of material last year that is in process now. Those tests are well along the way. We will be provided with results for those before the PEA. I'm not certain if we'll be in a position to announce those results prior to the PEA and then incorporate them into the PEA, or if they'll come out when the PEA comes out. Okay. We'll probably lobby to be able to talk about them earlier. And that work is going very well. It's moving along quite well. We haven't announced any results on that. We have announced results from similar test work on our sister company, Regulus, in Peru, where we've indicated that we've gotten very favorable results from low arsenic material, typical porphyry breccias hosted material, as well as from more arsenical rich material. Here in Argentina, we don't have that much of the arsenic in the project on it, but if we can show that Nuton works, it's a great way for us to process arsenical material. And so it's critical that we've demonstrated on the project in Regulus that Nuton is capable of leaching sulfur salts or arsenical rich copper ores. And we anticipate we'll see those type of results coming out of this project as well. So that's moving along quite well, and we're looking very much forward to being able to present those results either prior to the PEA and then incorporate into the PEA, or as the PEA comes out. We've also, this past field season, the first part of the drilling was 6,000 meters of drilling dedicated just to collecting large diameter core for the next phase of metallurgical test work for Nuton. So we've sent nearly 7 million tons of material to a laboratory in Australia, where we're starting the work on 10-meter columns. That's our phase 2 test work, which will be critical for the pre-feasibility. So we want to get that underway as soon as possible to let those have a long runtime. But all indications are right now that the primary sulfide leaching option will be a viable pathway going forward.
Yeah, it'd be interesting if they allow you to talk about it before that as well, because it is ultimately up to them, right? As to what happens with the
it's done under confidentiality, so it's we will be able to use them for the PEA, so they'll come out by then for certain on there, and they've been very good working with us. They allowed us to put out the early stage results on Argentina recently, and I wouldn't be surprised if we agree to be able to put those out ahead of time. Part of what you addressed before is that it's, rather than waiting just for big news coming out on a PEA, it'd be nice if we have some additional news leading up to that to catch people's eyes. So we'll probably lobby hard for that and see if that makes sense to go forward ahead of time. But that would require their agreement to do that.
Well, I'm a bit of a cowboy, so patience is not one of my virtues. Even though it's only just until Q3 of this year, I would too like to see it earlier. So that's good. What is there internal level discussion or plan B though, John? Really, what I'm looking for here is what happens if Nuton does not trigger kind of the PFS payment or the back out post PEA. What really happens in that case?
Well, in that case, we're going forward with a conventional approach to the project and taking a looking on that. And so if just to remind the listeners on this, our agreement with Rio Tinto for doing the test work and the evaluation on whether Rio Tinto Nuton works on the project includes a series of staged payments they make to us as option payments to acquire 20% of the project. So as we complete each major study, there's a payment due that funds the next study. So it's been a great situation for our shareholders because that agreement with Rio Tinto is effectively financing our work moving forward, but in a non-dilutive manner, in the sense of a non-equity dilutive manner. They're not getting shares for those payments. They're just making option payments to be able to buy 20% of the project upon completion of the pre-feasibility study. So it means that we're not having to do financings and issue more shares and dilute the company in that sense. And the price we've agreed for their option to purchase 20% is significantly higher valuation than our current valuation as a company. So it's been a great setup for us moving forward. But it's highly important that they make each of those payments. And that next payment is when we deliver the PEA. They will have a short period of time to make up their mind if they make the next payment of $30 million to keep their option valid to move towards the pre-feasibility. And so that's a critical one. We would prefer to not do a dilutive financing to raise money because the money that would come in from that would match very well with what we need for next year going forward. But we do have to be aware that if for some reason it didn't work, how would we finance things moving forward in other ways? So we keep lines of communication open for alternatives on moving that way. But at this point, I don't think we have any concern that we need to. All things are looking pretty positive moving forward on the project.
Is there appetite within your investor base? I mean, when you go out there, conferences, whatever, one-on-one meetings, and you talk to some of your larger shareholders, I would assume they might be asking the what if question as well. So is there, when you tell them, we might have to finance it ourselves on the back of that if it doesn't go through, even though your expectations is that it does, what are they telling you? Are they telling you like, oh, well, no problem, we'll finance you, or what's the appetite with them?
Yeah, and like I said, I don't want it to make it look like a financing's imminent at all. We don't think that will be the case, and by any means on that. But I would be very confident that you could finance a project of the quality of what we have moving forward. And it's not just the contacts we have in our investment base. We've been doing a fair amount of work on investment conferences to attract new investors coming in. And we commonly get that question is, I don't really want to go open market. I'd prefer to, be involved in a placement. And they're somewhat disappointed when you say, well, we don't have a placement in sight on this. So you need to kind of go open market on it. But so we're well aware that there's appetite for that. And particularly it's not just our project and it's not just the copper space, but the quality of our project plus the interest in copper right now is drawing a lot we're hearing from investors that traditionally haven't invested in mining industry at all, realizing that copper may be a good spot to be in right now. But then you layer on top of that the attractiveness of Argentina as an emerging new play on this. And one comment we make to people a lot is that 5 years ago, if we went to an investor conference and said, hey, we've got this great project in Argentina, people would say, oh, it's Argentina, I'm not interested. Right. And now we go to an investment conference, and on the setup for those, there's often kind of a matchmaking on who you're going to be talking to, and a large number of people are seeking out opportunities in Argentina specifically, and that's just been such a major change on things. So I would have full confidence that we could finance the project moving forward if we needed to go to a traditional private placement option to go forward, but I don't anticipate we'll need to do that.
I also like that if people are coming to you, you're telling them no warrants for you, sir. You have to be a normal person and buy in the open market. I wish more companies were able to say that like you are. How much money do you have left right now after the infill drilling that you've done?
With that right now, we've probably got about $8 or $9 million left, so we're in a good spot right now. I should have known that number off the top of my head, and I don't. Keep in mind when people take a look at the financing our financial situation is that I mentioned it was about a $25 million US budget for this past program going forward. Much of that financed by two payments that Rio Tinto made to us over the course of the last year. But the project is currently an 80-20 joint venture between ourselves and Sibanye. And we've earned in completely to that 80%. So now it means that Sibanye co-pays to maintain their 20% interest. And they have given us indications that that's their intent, is to co-pay. So we'll see part of that expenditure covered by Sibanye moving forward.
How
20% of that.
Right. Yeah, that's it. How much did you drill in total again?
We drilled a little over 20, it was 25,180 meters or something like that. It was just slightly over 25. We planned 25 when we got in just slightly over 25.
That was 4 rigs, 5 rigs.
We had up to 6 rigs going this year.
Okay.
So it was our biggest campaign by far.
Yeah. That was mostly or only infill?
It was a combination of things. So 6,000 meters of it was large diameter core for metallurgical testing. And so with that, you use all of the core, so you don't get assays. And those are mostly twin holes, so that you're drilling in spots where you have a good chance of getting what you're trying to get on those holes. About half of the rest of it was probably infill. And then we also had drilling along the margins to determine where our grade cutoffs are on there. We have a situation where a lot of times the deposit isn't cut off within the pit. It's getting low grade, but it's kind of important to define some of that, because you're converting if there's no drilling, we have to treat it as waste. If we drill it and it has low grade, that doesn't sound like it's all that important, but it actually means that you recover some of your costs with that low grade. And so it helps the economics tremendously. So we accomplished some of that. There's more of that to go as well. And then also some water work and some geotechnical work. So the infill drilling, there'll be a substantial number of infill holes, but those are holes that are drilled between existing holes. And so in an ideal world, they show the average between those holes, and you're just improving confidence. So it's not likely to add tons, and probably doesn't particularly change grade either on things. It just gives us a higher degree of confidence. But that's an important point, because when we move at a PEA level, we're allowed to use all 3 categories of mineral resource classification. So we can use measured, indicated, and inferred mineralization. But when you move to a pre-feasibility study, you can only use measured and indicated mineralization. And so many times a junior like ourselves trying to tackle a really big project like this gets into a bit of a bind between a PEA and a pre-feas. And in the worst case, you might almost have to double your drilling to do all that infill drilling. And in our case, we're quite fortunate because of the previous drilling by previous operators on the project, plus the large amount of drilling we've done. 2/3 of our current resource is already measured and indicated. And much of what's inferred is pretty far out on the edges of the deposit anyway. So we don't have an extreme amount of that. Allows us to project that we'll do the PEA by Q3 of this year and the pre-fees by the end of next year. Normally, for a company like ourselves, it would probably take a bit longer to get to the pre-fees, and it would be at a significantly higher cost, because you'd have a lot of drilling. To put in perspective, right now, we have 198,000 meters of drilling on the project. So almost 200 kilometers of drill core on the project right now. So
This might be pushing it beyond what you can tell me again, but what's this drilling telling you about the impact that it may have on the overall cutoff or the strip ratio or other PA economics related numbers here?
That's I can't the answer I've had to give you, that I can't say much about it until we have the actual numbers, and it's still in definition too as we're going forward. So I can speak a little bit to the cutoff on this, and that some of the things that we work with on a PEA or any type of an economic valuation right now is what parameters do you put in for mining costs, and what do you assume for your metal pricing on things going forward? And there is a lot of upward pressure on capital costs to develop mines and operating costs to operate mines, and that can affect what cutoff you use. And a large low to moderate grade deposit like we have, that can be a pretty sensitive factor on where your cutoff falls on that, and what your overall strip ratio looks like. So that's one thing we're working pretty closely to get accurate numbers, and it's not easy right now. Those numbers are in flux all over the place, and we probably don't even really want to get into potential impacts of tariffs and things like this on it's very hard for companies right now to accurately forecast what capital costs and operating costs are going forward. Our approach is to be conservative on this. And so when we come out with a PEA or pre-fees, we're trying to use numbers that are closer to what the major mining companies would be using for their evaluation. A simple one we can talk about is, say, metal prices right now. Today's copper price is 470 or 480 a pound. Legally, by exchange rules, I could use that for our forecast price for doing an economic evaluation on the project. Mm-hmm. But no major company will be using that price to evaluate us for a potential acquisition target. They'll be being conservative and using a longer term forecast price for that going forward. And so we try to not make it look overly rosy by using the most optimistic parameters you can on this. We try to use something that's more conservative and more realistic on it, which sounds counterintuitive. It seems like we should be trying to get the largest NPV on the project we can, or the largest or the best rate of return on the project. If you do that too much, it's like overpricing your house to sell it. If you set the price too high on that, then you lose credibility on it. So we're trying to use economic evaluation parameters that are much closer to what potential buyers or operators would be using going forward.
Does CAPEX, I mean, it has been part of what you've been telling me here, but does it worry you to a significant degree, so to say? I mean, I understand you're not going to be able to tell me too much about where it might be and whatnot, so we'll wait a couple of months here. But does it worry you? Does it keep you up at night?
No, it's right now I'm at the stage I'm more curious to see what the final numbers look like on this. It's the project will be economically viable. There's no doubt on that. The question is just how how does it look like, and how do you roll it out? Mm-hmm. And so there's a lot of different pathways you can take, and some of it's pretty fun because you're looking kind of creative sequencing and best ways you can make the project most risk-free. So you want a project that has a clear pathway on it and an executable pathway on it. And then obviously you want it to be the most economically viable project going forward. So that's kind of a fun puzzle to move into. It's a space as an exploration geologist, we tend to spend most of our life looking for things and finding things on this. Now we're actually getting to decide how it rolls out and what does it look like. So it's a pretty exciting stage to be in right now. I don't lose too much sleep about it. We've got a lot of hard work and a lot of decisions to make on it, but there's some good pathways to go forward.
Well, it's also interesting to me listening to you speak and think through your reasoning behind this PEA, that it's kind of like you could have done it way differently. You could have had it out to the market way sooner, but it would not have been of the same quality. Like, you're doing this PEA under the assumption that you would go to PFS for sure. So this might be an interesting topic here to talk about. Has your opinion changed on what a good time to sell this asset might be since the last time we spoke? Like, does Alder have to get to the PFS level necessarily, or how do you see it strategically?
Well, what I can describe is what our strategy is on this. Sure. There's no magic formula. We get this question quite a bit from investors. Why can't you sell it today? Or when are you going to sell it? It's a variety of things. But what we can observe is that for the type of project we're looking for, the size and the price it would be to acquire it, and particularly the price it would be to build it. It means that companies need to have a good degree of certainty on the project. So we refer to it as de-risking the project. And so you wonder, why doesn't a major mining company buy us today? We can see it's a large resource. It's there. They have the same questions that we have, and the public should have on, well, how big is the mine going to be? How profitable is the mine going to be? You really want to see that. So they would be comfortable with us advancing the project farther and de-risking the project more, even though that adds value to the project and increases the price tag for them to acquire it from us. And what we've noted is over the past, say, 3 decades, since we've seen copper really kind of move up in the early 2000s in price, is that most large copper deposits, the type of project we have, tend to be acquired by major companies approximately at a pre-feasibility stage. And there are cases where they get sold earlier at a PEA, very few cases where they get sold as a resource. And if they do, it's at a heavy discount to the company selling it. You haven't revealed the value on it yet. So we kind of view that accomplishing the PEA is a very important step. Then you can begin to see at least what one vision of the best pathway forward on the project is. In our case, we'll probably show 2 alternatives to it on this project. That kind of puts it into the position where companies can begin to wrap around. Potential acquirers will have their own view on how to do things and their own preference and their own parameters that they use on it. But it's nice to have a base for both the public to see and for those potential acquirers to see going forward. So usually when you get to a PEA, I consider that as we're entering into a window when the project is defined enough, we can start to see that it might be a potential for someone to acquire. Getting to a PFS gives them more certainty on what costs will be and what things are going forward. Going beyond a pre-feasibility study into a definitive feasibility study, to me, is really in the realm of the group that will be developing it. That's time. Now, layered on top of all this is that you can have a great project with a wonderful pre-feasibility study, and if the market's off, or the country you're in is not desirable for some reason, you're not going to be selling it.
Yep.
There's a lot of economic uncertainty in the world. All of those factors play into this right now. Some things that I can point out on this is that for some time now, there's been an obvious looming shortage of copper coming up. There's clearly increased demand. It's not just electrical vehicles. It's the copper that's necessary for development of AI centers and a large number of other areas where copper is needed in greater quantities. And as an industry, we're not developing very many mines right now. And that's just going to put greater pressure and a more of a supply gap coming up on this, which will probably drive copper prices up. And that means that most of the major copper companies and even some people that want to be copper producers are realizing that it's probably a good idea to be developing copper resources to fill that anticipated gap coming up. Some companies already have the projects on their books that they have to develop. Some don't have those projects and will need to acquire them. And so we're seeing that we're into a good market condition right now for people to be acquiring assets. We've seen companies acquiring a lot of producing assets over the last couple of years. And we've just begun to see companies begin to acquire development stage assets. We saw BHP enter into the agreement with Lundin Mining for Filo and Jose Maria. We've seen Rex Resources be taken out by MAC in Australia. So we're starting to see those happen, which makes us believe that we're delivering a project into a favorable window to go forward. So all this points to we're earning into that space between PEA and pre-fees on the project. We're earning into it at a time when groups are very interested in developing new projects and acquiring them to develop. And we're in a country that is very actively promoting the development of a major copper industry going forward. So it's aligning somewhat as a perfect storm right now.
But it's a bit of a balance too, though, right? Like in order for you to get the most value for or the highest amount of money for this project, you have to please any potential acquirers of the asset, but at the same time, you also have to please the market so that you have a higher share price on the day that the potential offer is made. So, what do you think is the risk of losing the market's attention here as you go kind of deeper into the thaw of the Lassonde curve?
That's always a risk on there, and we see that commonly happen when companies in our space get detached. The value of your project, your market cap of your company is much lower than you think is a fair price for acquisition of the project. But an acquirer, even if an acquirer agreed with you on a price, but that price was three times your market cap, the optics aren't there, and they can't. They would be criticized for overpaying for an asset.
Yep.
So the assumption that the market fairly values projects is intuitively logical, but not actually often the case. So we commonly see cases where companies are so undervalued that they wouldn't sell if they could help it, and the buyers would buy it for significantly more than what their market cap is, but they couldn't weather the optics to be able to do that. And so then sales don't happen. So that commonly happens when we see low points in the metal cycle. Uh, in the period, say, from 2012 to 2022, it was very difficult for companies in our space to establish a market cap that was anything close to what we think. And we didn't see very many companies buy projects. Now, the buyers weren't buying because the market was tough, but also there wasn't that situation where the market caps of companies are moving into a reasonable price for both parties to agree to a transaction. And so it's part of why we have such cyclicity in the metal cycle is that when the metal prices go up, then we start to see the market caps of companies go up, and they actually move into a price range that's fair to both sides for the transaction to happen. And so that's a critical thing and something that we're well aware of. And if we expect to get a fair value for the project, we need to have our market cap moving to that. So that's right now, that's one of the reasons we're very much looking forward to a PEA. Because when we're at a mineral resource estimate stage like this, people kind of intuitively can make a guess on what it is there, but there's not a clear view to what a project economics would look like. And so when we move to a PEA, there will be an NPV on the project under the scenario that we put forth for the project. And that NPV is a more solid number for many investors. So we anticipate that we attract an entire different group of investors that need to have those type of parameters to feel comfortable investing. And then with as tightly as we're held right now with an influx of investors coming in, we'd anticipate we'd see that market cap move to a much more fair evaluation of what it is that we have.
Given that you're now operating Altar as a JV2 with Sibanye, what are they telling you about this? And maybe also how much decision power do they really get here in terms of corporate strategy?
We work as good partnership with all of our significant strategic investors. We consider Sibanye obviously to be a strategic investor, South 32 as a large equity holder in the company, Rio Tinto without the equity position, but with the option to buy 20% and working closely with us on test work. And Root One, our major investor that holds a very significant portion of the shares in the company. So all of them have a voice, and they've all been good partners with us to move forward. We drive the project. We make the determination of how we go forward, but we'll certainly listen to them and hear what they have to say. But the three majors that are involved with us don't have exclusivity. They have to compete with anybody else that might be interested in the project. They have certain advantages as having a partial ownership or a pathway to a partial ownership of the project, either via equity or direct interest in the project. But they don't have exclusivity to block other offers, or other groups are free to come in and move forward. So it's a pretty full dance card for us right now. But it's a very collaborative process. We're quite pleased with everyone as partners. It's a good working environment for us.
You and I discussed this last time as well, where I'd ask you, do you think there's room for one more dance partner here or a couple of more dance partners? How do you see that happening? Has any of that changed? I mean, now that you're delaying the PEA for good reasons, as you explained it, but has your opinion on it changed? Is there room for more strategics or another party altogether to come in and take it out?
We evaluate each opportunity as it comes at us to determine how it is. Part of why we went to strategic partners on the project was there. Now it's possible to finance projects like this in the open market, but 2, 3 years ago, it was very difficult to raise the amount of capital that we require to move a project like this going forward. And so we entertained approaches from South 32, from Rio Tinto, from others to help us move the project forward. And that was the best pathway, the best for we always make our decisions in terms of what's best for our shareholders. And as I mentioned, we're major shareholders, so it's pretty easy to be aligned with what's best for shareholders moving forward. And so those were the best pathways to go forward. But you do take on a slight risk that you're getting groups that kind of have an inside position on this and may scare away other competition on it. So we structure our agreements pretty carefully so that they can't block interest from other parties. But they're groups that have interest in the project. They're very, very much contenders to acquire the project and develop it going forward. So we want to keep in a good relationship with them, but not in an exclusive relationship that blocks out other parties. Given the number of strategic shareholders that we have right now, we're not actively looking to complicate it by having more dance partners at the moment. But I can't say we wouldn't. There could be certain circumstances where a party brings something particularly attractive to the table and may even be to the benefit of the other strategic shareholders as well. So I would kind of doubt that we would do that right now, but you never know.
What are they telling you, or the partners that you have right now? What are they telling you about some of the other targets that you have? Radio, QDM talked about that last time as well, but can they in any way be involved in those, or what are they telling you about you potentially going there and testing them as well?
Really, everyone that's involved with us right now is very focused on Altar. That's the clear prize we have, and all of our efforts right now are focused on it. But that means that the other projects we have, mostly in the northern part of Argentina, are somewhat stranded right at the moment. And we're very conscious that there's work to be done. Those are some pretty interesting projects moving forward. And so we're currently in the process of evaluating how we move those projects forward, whether we do them ourselves, whether we entertain approaches from other groups. The approaches have been from other groups than the ones that are working with us right now. So Argentina's hot at the moment. Everybody wants to get into Argentina, and people can identify interesting projects that we're not rapidly advancing ourselves. And so we do get approaches from groups asking if we'd be willing to option those off, or even spin them out or do other things like that. And we're right in the process right now of evaluating we don't want to let those lie fallow much longer. We want those to be moving forward.
What do you give preference to, spin out, option? How do you see it?
We really have to, I mean, you don't want to be romantically attached to your projects too much. So the easiest way is to entertain ideas that come in and take a close look at them and just see what's best. What I do know is having the projects just sit there right now isn't adding value for anyone. And we even get occasional grumblings from the provincial governments on why aren't you moving these projects forward? They'd like to see them move forward as well. And so it's clear that we need to create a situation to move forward. And it's clear that the environment's ripe to do that right now. There's a lot of interest. It'd be easy rate to raise money to move projects like that forward. And there's untapped value for right now. Our shareholders aren't receiving any value for those projects. So we'll take a good, careful evaluation of what the best pathway forward is. And there are a couple different pathways to go on it.
Probably something for after the PEA, I'm assuming.
Most likely, yes. And it can factor into additional news that helps. So we're not just so target focused on PEA and pre-fees. That produces some gaps in between, which go back to your original question of we kind of flatline on share price in those periods of time. So having a creative solution to what we can do to unlock value on those projects, I think would be very welcome into our overall scenario right now.
having a creative solution to the often self-prophecy of the Lassonde curve is always something I'm looking for. So that might be interesting to see. You don't have any immediate exploration plans there, as far as I understand. Like you don't have a drill going out there or anything else right now, right?
We don't have it right now. One of the projects, Aguas Caliente, is drill ready, permits in hand, and there's permitting in process for Rio Grande, and it doesn't take too long for that to happen moving forward. So it's a nice combination of projects that are drill ready. Rio Grande actually has a small resource to it already and is immediately adjacent to an operating mine. So there's kind of an interesting scenario there. And several of the other projects are really early stage projects. So there's kind of a nice little portfolio of projects that are there right now that certainly warrant more work.
Hmm. What happens in between now and that PEA if it's not that work? Is it, I mean, we talked about potentially the Nuton results that might be interesting, but is there anything else that you might have, or is it just sit tight, wait for Q3, see the PEA?
We anticipate there'll be two batches. The drill results that we have from this year will kind of break into two nice batches coming out. So
Okay.
the first results should be out this month, and probably a month beyond that, we're still getting assays in on the final half of the results. So I would say sort of two drill releases, if you will, and those releases will likely talk about all the other activities that are going on around and kind of summarizing what the season accomplished and where we're going, and reminding everybody pay attention, PEA is coming, but we won't most likely won't be able to forecast results of the PEA. That'll come out as a PEA announcement, and that'll be there, with a possible exception of we'll see if once we know what the results that we'll be using from Newton. What we're looking for Newton right now is projected recoveries from the test work, and so we may be in a position to talk about those before the PEA comes out. They'll certainly be incorporated into the PEA, but we'll seek for as much as possible. Can we create pockets of news so people can see steady pieces of it coming rather than just hit them with a whole heck of a lot of the PEA in Q3.
I also imagine you'll be marketing in the meantime those results, but also kind of maybe, and again, I'm assuming, so tell me if I'm wrong, but getting new eyeballs maybe on the story ready for the PEA. So when the PEA comes out, you have people, ready to look at it. Is that something you're doing? What are you doing for marketing?
Yes, absolutely. We've certainly stepped up our marketing over the past year and a half on both of our companies. Just as we've got good projects that we view are significantly undervalued right now. They're pretty easy stories to pitch on why there's a good case for investors to be interested. So we're actively marketing and seeking new avenues to market in ways that we can get to people that are interested in these type of investments. And as I mentioned, we're seeing new players, new parties interested. It's kind of exciting out of Europe where you're based. We're just seeing a lot of younger investors come in, a lot of people that are viewing that copper is a critical metal for changing the green initiative on this moving forward, and you can approach it in a whole different number of ways on it, but fundamentally copper is necessary to transfer. As we like about it is you can bet on hydrogen, or you can bet on lithium, or you can bet on a number of different things to take advantage of the energy revolution on this. But it all comes back to copper, because copper is the one that's going to be transmitting that electricity around. So that's why we like that space and like to be in. And it's a welcome change now. In many cases, mining industry is viewed as kind of an old, archaic, interesting, not particularly attractive, particularly to say younger investors or investors that haven't historically participated in the space. We're seeing that change now. We're seeing a lot more interest in it going forward. And we see that being different in different areas. That's one of the reasons we're marketing pretty heavily into Europe right now, just because it's more receptive.
Do you expect to have a significantly higher marketing spend before the PEA, or are you just going to keep it steady and kind of keep following that strategy?
We're always in discussion, but it'll most likely be ramped up as we go into it. And we've kind of been doing it over the course of the year, but it'll probably step up. And what we see in marketing too, a lot of times, is that it's not that you don't go to a show and then see instant gratification out of it.
Mm.
It often takes investors 2 or 3 looks, hear from us a couple of times, see us deliver on things that we've done, and be aware of what we are. And so then as we get closer to that point in time, we've been reminding them, look, this could be a significant inflection point in the company coming up, that then they're positioned for that. It's I don't think you and I would just go out and buy something tomorrow that we heard about from somebody the first time. You oftentimes need to hear it a couple times to do. So marketing is a process that takes a little bit of time going forward, and we've been laying that groundwork. And we're seeing it in increased liquidity and new investors coming in and new contact points that we're having going forward. So we think we have quite a few people that are becoming increasingly aware of the opportunity. And if we deliver good numbers on it, I think there'll be a pretty good reaction to it.
Well, John, I've been through most of my questions that I had here. What keeps you up at night, though? I mean, it's not the regulatory regime. It's not the money. You said you expect to go forward with Nuton and everything. What keeps you up at night if it's not all that?
Yeah, right now, probably, apart from the day-to-day things that we have on running on operations right now, is just kind of indecisiveness in the market and uncertainty in the global markets right now. Is it's not something that we can control or do anything about ourselves on it, but that can affect whether companies make a returns. We've seen this anticipation that there'd be a large M&A movement in our space for some time now, but it's kind of slow to develop. And now, there was uncertainty around COVID and other things happening, but now we're seeing some uncertainty that's primarily on geopolitical stuff that's going on right now, and that can sometimes freeze up decision making in the process. So what we'd like to see is more certainty on that. We're somewhat protected from that in Argentina. Argentina is kind of like this little island right now where everything's going in the right direction and moving forward fast, and things are going well that way. We're not seeing some of the issues that we see in other countries on determination, how you permit or how you don't permit it. Everything's go forward and go well. But that's one thing that I just keep an eye on and see how we do that. I think that will be overwhelmed by the need to get the copper in, and but it can affect what companies, how bold they'll be on acquiring things moving forward. Now, on the other side to that, we're, as perhaps part of this same process, we're seeing more geopolitical positioning to capture resources than I've seen in my career on it right now. So in the midst of all these tariff battles and things that are going on right now, countries and governments are becoming increasingly concerned that they have supply chains of critical metals that they need or critical resources they need to go forward. So we're seeing, China develop incredible amounts of infrastructure just to be able to draw resources towards them. We're seeing the U.S. counter that in some ways as well, and we're seeing just a lot more concern for being able to make sure that projects are developed and that countries have pathways to that. So that could play into our hands as well. It's a very interesting point in the resource world right now between geopolitical tensions on this, between increased demand, between hesitancy to develop projects, which just exacerbates the demand issue on this or the supply issue on it. And so it's a pretty interesting time to be living in right now. And all of that we need to kind of gel at the right time for us to be able to accomplish our strategy moving forward. So,
Not
but
only
I'm not
Argentina.
losing too much sleep on that. So I'm losing sleep because I'm having fun envisioning how we develop a good project going forward on this right now. And there's just a lot of work to do to get there.
Well, that does sound more fun than losing sleep over geopolitics, to be fair. But not only in Argentina. I mean, the situation is interesting all over the place. Peru as well. And maybe while I have you here, might as well try to hit two birds with one, maybe one and a half bird with one stone. But just briefly, what's going on over at Regulus? How are things proceeding there? What's the next piece of news there?
With Regulus, we're not drilling anymore. We've largely have the deposit defined. It's still open, but between what we have and what our neighbors have, the deposit is of a size right now that is similar to Altar. It's not necessary to find more mineralization. Just to refresh people that might not be familiar with the story, At our sister company, Regulus, we have the same strategy of looking for a large copper or copper gold resource that we show the size and de-risk it and make it available for someone to acquire it from us to develop. We're on to a really interesting project called Antiquary, but it's a bit complex in the sense that we have about a third of the project, and a neighboring company has the other two-thirds. And that neighboring company is a joint venture consisting of three companies, which are Southern Copper or Grupo Mexico, Buenaventura, and a smaller company called Espro. And they're operating a heap leach gold operation that's mining the oxide cap over this very large copper gold sulfide deposit that's partly on their ground and partly on our ground. So what we're working towards on that is there's a lot of interest in the project, but there's not a lot of public information out on the project because we can't, if we don't own all of the project, we can't report it in a conventional manner. And so what we're working with is with the neighbors to do a consolidated resource estimate on the project as if there weren't property boundaries, look at it as one large project. When we have that completed about mid-year this year, we're not allowed to present that to interested parties or to the public unless we have mutual consent. So we're working towards doing that, but it will require consent of our partner or neighbors next door to be able to go forward. But I don't think they would be entering into this exercise if that wasn't at least a potential pathway moving forward. So what we're trying to do is to be able to reveal the full size of the project, the full size of what our mineralization is on that project, and attract parties that might be interested in coming in and replacing some of the parties that are involved in this and developing the project move forward. So about mid-year is when we will be in a position to be able to reveal to interested parties more about the project and interact with those more. It's one that is, we've talked about the challenges with Altar on news flow. With Regulus, it's even more challenging because almost all of the work we're doing is under confidentiality agreements and in the background. But working towards making potential acquirers more aware of the quality of the asset and then ideally making the public more aware of that as well. But that takes a little bit of a challenge for us to get there. But we're very pleased with how it's going forward. It's a very collaborative environment with our neighbors right now, and there's a heck of a lot of interest in the project. It's one that's large, both in the sense of copper, but also contained gold as well. We have a little over 500 million tons at about a 0.7 copper equivalent on our portion of the project. The neighbors have significantly more than that. But if we combine the published resources from our side of the project and the published resources from the other side of the project, we're talking about over 13 billion pounds of copper and over 10 million ounces of gold. And we both significantly underreport the project. And so this is a very attractive asset. It's in a mining country. It's a brownfield setting. It a remarkably low strip ratio that's becoming lower by the day as the neighbors mine the oxide cap off. They're effectively pre-stripping the project moving forward. So it's one that attracts a lot of interest. It's just a bit more of a challenge for us on how we can expose that to the public.
Well, when do you think we should do a Regulus interview? When do you think that would make sense in terms of timing?
Well, about mid-year, I think it's a good time. Yep.
That's in about a month from now?
Month or two. Yeah.
A month or two, something like that. Okay, yeah. Good.
Yeah.
Well, what am I forgetting to ask?
Certainly as people come back off summer vacations and into the fall, some are right in there would be a really good time for an update. Yeah.
People go on vacation. I'd like to know how that feels.
I hear that's the case. That's why they say they're not buying. So
that's a good excuse, I suppose. John, what am I forgetting to ask you? This has been a good conversation, wide ranging. I'm just looking over my notes and everything that you told me. I think we've covered a lot, but what have we not covered? What am I forgetting to ask you?
I think we've really covered quite a bit of it. Terms of no. I think from my standpoint, I think it's as usual. These are great, really thorough deep dives into the company. So I really appreciate that. It's quite a challenge to present projects like we have in 15 or 20 minutes. And this is a great forum to allow us to dive into things a little deeper. So I think this, in conjunction with some of our previous conversations, have things pretty well covered.
I like how you actually thought about it. Most CEOs that I ask that question, they're like, nope, nothing else. And they're just looking, they're looking to get away from having to look at my face any longer. But no, I do appreciate this. It was a really good overview. So thank you so much for your time.
Great. Thanks, Antonio. Look forward to catching up soon.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find a company's official filings, and I encourage you to read and analyze the management information circular, the financial statements, the management discussion and analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."